What a difference a year makes. At the beginning of 2022, real estate markets all over the world were up against huge demand, limited supply, and high prices. Looking towards 2023, the landscape has changed dramatically since the central banks began raising interest rates last spring. So, although home prices are falling and homes are lingering on the market a little longer, many in the industry look at this shift as more of a normalization than a correction. Sales actively and price growth from March 2020 to March 2022 was too hot, not to cool down. So you're looking at 44% increases, for example, in some places. Insane. So in recent years, low interest rates help push home prices and income further apart. For cities in the bubble risk zone, prices have climbed by an average of over 60%. Toronto, Canada, taking the top spot in inflation adjusted terms over the past decade. So while rents and, real incomes increased by just 12%, and while COVID-19 briefly put a dent in urban demand, rents in the cities, that I analyzed rose at around the same pace as pre-pandemic times. So as a result, all but three of the cities that I looked at saw positive price growth over the past year from a normal price perspective. Home prices can't rise forever. It's just not going to happen. So, you're going to have this correction. You're going to have a normalization, in my opinion. So we look at U.S. cities occupy a number of the top spots of the research that I looked at. Miami in particular is seeing strong internal migration patterns as well as renewed interest from foreign investors. We saw that going on. Hong Kong experienced the biggest one-year normal drop of all the cities I analyzed. Since around 2019, Hong Kong has broadly stagnated as the lack of affordability. Their economic woes that they went through and the pandemic restrictions all took a major toll, on demand. What was going on with China and all that craziness. So, the prices aren't going to rise forever. In this, we looked at the prices kind of going hand in hand with the rents. And, most cities with high validations, price corrections have already begun or could be right around the corner from the data looking at this globally. So according to the UBS, most cities with high validations, price corrections have, begun. And so you are seeing price drops across all major cities. However, overall, global residential rents continue to climb despite the worldwide economic uncertainties right now. And just taking some of the top spots, London, rents are up. Singapore, New York City, California, top the list of global cities' rent prices growth in 2022. So according to international property consultant Knight Frank, and some of the data I looked at, prime residential rents continue to rise, but the rate of growth is slowing. Okay, so across 10 global cities, luxury rents increased by 10.2% on average in the 12 months of Q3 2022, down from a high of 11.9 in Q1 2022. So surprisingly, New York led the rankings for the third consecutive quarter. Annual growth, may have dipped from high of 39% last quarter to 31%, but limited stock and continued demand is keeping rents elevated right now. The number of properties for rent across Manhattan is down 5% over the quarter, but 65% lower compared to pandemic times in September 2020. And that's according to research from Street Easy. Singapore, love Singapore, spent some time there, a couple months, very clean city. A lot of pats there with, ballers there with money. Singapore sits in second place, registering a 23% rise in luxury rents over the last 12 months. The opening of borders, along with the introduction of new visas to attract top talent from across the world, has generated an uptick in demand in Singapore. New rules announced in September mean those looking to sell their private homes and purchase, a non-subsidized housing and development board HDB resale flat now have to wait 15 months. This policy shift is adding to rental demand as sellers opt to rent in the interim and wait on that. So London, rounds it out. If you look at the top three, it completes the top three. Although the UK capital recorded a 19% rise in the year to Q3 2022, annual rental growth is down from 27% last quarter, reflecting the slowdown from the summer rental peak. But demand remains strong right now, according to all the internal data, Knight Frank being one of them. Data shows the number of new prospective tenants was 60% above the 5-year average, excluding 2020 in October. So while new listings were down by about roughly a third. So, like I said, one city saw prime rent decline, Hong Kong minus 5%. Demand in Hong Kong was largely locally driven in the third quarter due to travel, the travel constraints they had to deal with. But with restrictions on new arrivals, now lifted, demand, you might see a demand may start to up a tick with, from expats coming in, So luxury rents across the board, when you look at all these major cities, are still holding strong overall. You're looking at, following 9 base rate hikes. The average mortgage rate is currently around 6%, a little higher, prompting some vendors to downsize temporary and rent rather than sell their property. I mean, take Dubai, for example, a city I follow very closely and have friends there. Dubai's high-end real estate market has had a seemingly unstoppable year, and it looks to continue in 2023 from a purchase perspective and a rental perspective as well. Something to keep in mind. More millionaires exist today than any other point in history. Markets are more globalized than ever right now, and there is much wealth to be distributed, especially amongst the hyper-wealthy markets like Dubai, like London, New York, Los Angeles. Housing remains, and I've always said this, and other people in the industry have said this as well, remains a primary investment for the world's most affluent citizens and a safe hedge against inflation. For example, prime properties across Los Angeles are expected to see their values grow 4% in 2023. That's not just from me, that's according to forecasts from Knight Frank. More billionaires are in the state of California than any other state in the United States. And I just talked to someone the other day, they said, Los Angeles, that's got a lot of homeless. Yes, in downtown, but you're not going to see any homeless in Malibu, really Beverly Hills, Manhattan Beach, Hermosa Beach, Pacific Palisades. We have a homeless issue in every major city. It's a tragedy what's going on. But you have to look at things regionally. You have to break it down. You just can't paint a broad brush and say the whole state of Washington is full of homeless. The whole state of California is full of homeless. So I look at the micro data and, you're going to see a normalization here. And all this clickbait stuff on videos and newscasts about housing crash, I've held pretty firm. I've held pretty firm on where I think foreclosures are going to go. The base was low. They're up 700%. You are going to see issues with that because there's a lot of headwinds that need to be accounted for. The inflation is going to continue in 2023. There is millions of jobs that are going to be lost in the tech sector, and that's been happening. They covered that up before the midterm election, and now these companies are laying off. So there's going to be a lot of corrections here. But like I said, the hyper wealthy, the ultra wealthy people have money to play with. And in these markets like London, LA, Dubai, they're going to continue to buy. So we do need this normalization, but if you, and I'm an investor first before I'm a real estate broker and all these other things that I'm doing, my rents are up. I'm on some of my properties. I have not raised rent if I have good tenants. The eviction ban was just lifted in Los Angeles the other day. I have someone who hasn't paid rent in 7 months. So I follow the rental market very closely because that's what's near and dear to my heart is being an investor. And that's what I do primary. So rents are up globally. They're holding strong. And you're seeing a correction in the housing market and normalization, which we need right now. And it's January, start of a new year. think big or go home, but think creatively. Take care.